The first thing I think I'll do, and that's what I'll do next time each time I'm buying a house, and that's what I'll suggest would be to what it is basically an agreement in principle. It is sort of like a gentleman's agreement. The lender is saying, I'm going to lend you this money after you've answered some questions, and if the questions you've answered checks out when it comes to it, finding the right mortgage, there's a way to do it. There's a right way to do it, and there's a not so smart way to do it. Don't go to your bank and ask them to give you a mortgage. No. Are you a first time buyer looking to buy your first property in the UK as an NHS staff member? Whether you're a doctor, dentist, nurse, physio, or any other healthcare professional, you may even be a member of the Royal College. But if you're not a member of the royal family and your last name is not Grosvenor, chances are that you will need a mortgage to buy your first home, and this would likely be your biggest financial decision yet. Now, if this is the case, then this video is for you. If you're looking to buy your first house and you think you might need a mortgage, you haven't got a wad of cash to go buy it cash, this video will be very helpful because we'll be discussing everything you need about buying your first home as a first-time buyer, getting mortgages in the UK. And at the end of the video, I'll give you a free gift, a download of my free step-by-step guide for first-time buyers that you can use. I've written this based on my own experience, and I've broken it down in a simple way that you can understand. Now, if you're new to this channel, or if you just stumbled across this video and you're wondering, how did I get so lucky? Well, welcome to Moneywise Doctor. And here we share financial insights for doctors, NHS professionals, nurses, dentists, basically to help you to make smart financial decisions and to avoid costly mistakes that doctors and NHS professionals often make. So if you've got any questions in the course of this video, feel free to pop them in the comment section and I'll be happy to come back to answer them. I just want to take a minute to thank you for what you've done. Yes, you watching this channel. Now let me tell you what it is. So this channel has grown at an amazing rate. It has grown at an amazing rate from 0 to over 1,400 subscribers just within 4 months of launching it. Now this is beyond my wildest imagination, and when we launched a few months ago, I thought it might take us a couple of years, maybe 3 years, to even cross the 1,000 mark. So thank you. However, something really fascinating has come to my notice, and I thought I should share it with you. I've come to see from our YouTube analytics, from our numbers from the back end, that 70% of you who watch this channel regularly and listen to the Moneywise Doctor podcast are yet to hit that subscribe button, that precious subscribe button on our YouTube channel. You see, when I first made this call a few weeks ago, it was about 75%. So thanks to you, the number has dropped from 75 to 70 just over the past few weeks, and I'm grateful. Well, our target is to get to 50%. If we can get 50% of the regular watchers subscribed, that would be fantastic. And I want to speak to the other 70%. While I thank the 30% who have already subscribed, to the other 70%, my question is, why haven't you subscribed? Tell me in the comments. So you see, this channel is a journey of financial empowerment for doctors, dentists, and healthcare professionals, and your support means everything to us. We're glad that you're on this journey with us, but it will mean the world to me if you will hit the subscribe button. So I'm here to ask just a small favor, that will cost you nothing actually. Subscribing to the Moneywise Doctor podcast on YouTube helps us immensely. It helps us to scale up, it helps us to be able to bring in expert guests and more interesting people, and helps us to enhance the quality of our production. And overall, this will make a bigger and a better channel for you, providing you with financial education that will help you build a stronger financial future as a medic and help you to avoid making costly financial mistakes. So, if you've watched our channel before, or read our blog, or if you found value in our episodes, or you've listened to the podcast, and if you like what you're watching right now, please, can you hit the subscribe button? Go ahead, smash the subscribe button. So thank you for watching, and now let's jump back to this episode. Right, so now let's dive in. If you're buying for the first time, if you're thinking of buying a house and this is your first time, obviously it can be quite overwhelming sometimes because you have a lot of questions, you have a lot of things you're unsure about, and you're about to make a big choice to make the biggest purchase of your life. I'll give you an example. In my own case, several years ago, my very first year of working in the NHS as a junior doctor, I made one of the most significant decisions of my life. I bought my first house. Well, it's not as significant as getting married, but I was single then. Now, looking back, there are a few things I wish someone had shared with me before I took that decision. But you know what? I consider myself lucky because I narrowly avoided making some costly financial mistakes that would have still been haunting me till today. And so that's why I'm here to ensure that you don't make the same, you can avoid the same mistakes and you can go about it in a smart way. You can go about it in a way that you don't turn around having a lot of regrets. Because buying a first home with a mortgage as a first time buyer is more than just a transaction. It's a bit of a leap of faith. It's a step towards building your future. I know it might not sound that serious, but you're committing to this huge amount of debt and navigating the mazes of mortgage and real estate. It can feel like going through uncharted territory, especially for busy healthcare professionals like yourself. That's why I'd like to break it down step by step in this video. So let's jump right in. We'll start with the beginning. I'll start with the dirty B word, budgeting. So budgeting for your first home. Nobody wants to hear about budgeting, but it's pretty important. So let's deal with that first. Before scrolling through property listings on Zoopla and Rightmove, let's talk about budgeting. So you can start your house hunt online, or you can start looking in your area, but your budget is key and will determine what sort of house you buy. That way, you can begin your search with a clear understanding of what you can afford. So it will be best to consider what you can afford for a deposit. So most times you could go up to 10 to 15% or even more. What's your deposit, monthly mortgage payments, and other accompanying expenses that most people don't think about, like conveyancing fees, home insurance, and of course, put something by the side for repairs. Again, if you're a first time buyer, but you're not eligible for first time buyer stamp duty relief due to the price of the house you're buying, then you need to factor in SDLT, that's stamp duty land tax, in your budget. And I'll tell you a bit about stamp duty land tax, which I think is a very strange, weird tax that I've had to pay a few times. So for anyone meeting the definition of a first-time buyer, so it's your first time buying a house, a higher stamp duty land tax threshold is usually applied, especially from September 2022 till 2025. You can actually buy a house up to £425,000 and not have to pay stamp duty. So if you buy a house above that amount, you have to pay stamp duty land tax. Now think about affordability from the point of being a pessimist. Don't think, oh, I'm going to be able to pay. Think of it very carefully. I think you should stretch as much as possible. Think of all the possibilities of things that could go wrong. You may not be able to think of all of them. A rule of thumb I tend to suggest is that your mortgage payment should not be more than one third of your income. Your salary should, your mortgage payment should not be more than a third of your income. That's the way I would think about it. Now, while current interest rates are currently unstable, and I remember at the time I bought my first house, interest rates were as low as 1%, and it seemed like a good idea to buy a big house and to take on a lot of mortgage. But now interest rates have tripled, and no one can actually predict which way they will go. So it's always good to assume what could happen if it triples or doubles. Will I still be able to pay? So finally, it's essential to budget for other closing costs as well. These are fees like conveyancing fees. You've got to pay a lawyer. You might have to do a survey. You might have to pay your mortgage advisor and all of that. So think about these things when you're factoring in your mortgage cost and your budget. Again, now choosing your mortgage, finding the right mortgage. There's a way to do it. There's a right way to do it, and there's a not so smart way to do it. But because I know most of the people on this channel, actually you in particular, you're smart, I'm sure you're going to do it in the smart way, and I'll suggest to you what I'll do. So choosing the right mortgage is incredibly important for the first time buyer. It's not just about getting the best rate. It's also about understanding what are the features and benefits that are most relevant to you. And this can all significantly impact your budget. So this section, you want to look at it quite carefully. And what you want to consider are the various types of mortgages and which one will be suitable for you. And the mortgage market can have a wide variety of options and products that they might come up with different names, but a lot of them actually fall into a few distinct categories, and I'm going to explain them to you. There's those that seem to come with lower interest rate and they are more flexible and they can make it a bit more easier to qualify as a first time buyer. There are also some government programs which you can look at in details. But what's important is that for you to get a mortgage, don't go to your bank and ask them to give you a mortgage. No. The best thing to do will obviously be to look at the whole market, find out who is giving the best deals, starting with a mortgage advisor, an independent mortgage advisor, not one from your bank. But here I've summarized in this table, which you can see on the screen if you're watching on YouTube, the different types of mortgage, and I'll walk you through them. So you can see table one, Moneywise Doctor Guide to understanding mortgage options for first-time buyers in the UK. So it's basically a summary of the mortgage options for first-time buyers in the UK. So number one is the fixed rate mortgage. Number two is a variable rate mortgage, and number three is a tracker mortgage. I'll explain them in details. Now, the fixed rate mortgage, I think if you want to sleep well, it'll probably be the one you go for as a first time buyer. The interest rate stays fixed throughout this initial period, so you know exactly how much you're paying every month. The monthly payments don't change. The downside is that when interest rates go down, your payments don't go down, it remains the same. But some people would rather say, well, I don't mind, I want to pay the same thing, so I'm sure, for the next 2 to 5 years. Now, the second one, the variable rate mortgage, interest rates can obviously vary, just as the name says, at any time. The monthly repayments are flexible, and of course, you can benefit from lower payments when the interest rate falls. But the bad news with that is that interest rate and repayments can increase, making it harder to budget for, which has happened over the last few years. And of course, there's a tracker mortgage, which basically the interest rate follows the Bank of England base rate plus a fixed percentage. So the monthly payments follows the base rate and the repayments follow the base rate. So if it goes up, it goes up. If it comes down, it comes down. The bad news again with this type or the disadvantage is that it's unpredictable as you wouldn't know exactly how much your payments would be with each month. In my opinion, I tend to think that first time buyers with lots of moving parts, I would rather go for a fixed rate at the beginning so I know exactly what I'm going to be paying for the next 2 to 5 years. But obviously, you speak to an independent mortgage advisor. This is not professional financial advice or anything like that. Now, let's look at the government schemes for the first time buyer mortgages that you may be able to benefit from as a doctor or dentist or NHS worker. And there are quite a few of them. One of the most popular ones is the lifetime ISA, which we've done quite a lot of videos on. If you go to our channel, you can see videos that will say lifetime ISA does not start at 40. But although there is no current specific NHS mortgage scheme, several UK government schemes can assist key workers, including NHS staff, in getting on the property ladder. I nearly pushed down my table there. Now, working with a very experienced independent mortgage advisor, look at the keywords there, experienced independent mortgage advisor, again, who has expertise in dealing with NHS staff and can assess the whole market can be highly beneficial. So this is not the same as just going to one bank or one particular lender. You want to go to someone who can check the whole market and also understands working with you as a doctor, because our income structures can confuse some mortgage advisors who don't tend to understand it quite properly. Might be able to so you want to work with someone who understands these things. But if you look at the table below, the next table, I've summarized the government schemes. Again, if you're watching on YouTube, you can see the table. If you're not watching on YouTube, or even if you're watching, don't worry, I've included a PDF that you can download for free, a link to a PDF you can download for free with all of the steps one by one and all the different schemes, including the government schemes. So let's look at the government schemes. Number one, we've mentioned the lifetime ISA, which we've done a lot of videos on. I'll touch on it. Number two, there's the help to build equity loan. This is obviously for people who want to build instead of buy. Number three, there's a shared ownership scheme. Number four, there's a right to buy scheme. Number five, there's a first home scheme. And number six, there's a mortgage guarantee scheme. So there's quite a few options. And if you head over to moneywisedoctor.com, we've got all this treated in a detailed article, and you can also download it as well from the links in the video in the comments section. Now, the lifetime ISA, I don't think we'll dwell too much on it because there's already a video on it. If you just search on the channel, But the highlight of it is that the deposit required is only £1. Obviously, you want to put more. The ownership type is full ownership. So when you buy a house with it, you own the house. Benefits is that the government can contribute up to 25% and up to £4,000 saved annually. So you can get as much as £1,000 annually. But you have to be between 18 to 39 and must be a first home, and the home cannot exceed £450,000, especially if you're outside London. So that's it. Now, for help to buy is a bit of an equity loan. The deposit required varies, but the ownership type again is a full ownership. The benefit is that the government equity loan helps you to fund your custom house building. So if you want to self-build your own home, this one will be for you. I don't consider myself as Bob the Builder or any sort of house builder, so I wouldn't go for that one in details. Again, the requirements are also on the PDF, which is you can get in the link. You can download it, or you can head over to moneywisedoctor.com to get that. Now, the other scheme we mentioned is the shared ownership scheme. As the name goes, it's shared, so deposit required will vary. It varies from 5 to 25%. Ownership type is part buy, part rent, and benefit. It enables people to get on the housing ladder with a smaller deposit. So you have a smaller mortgage and a smaller deposit, and then you can buy more shares of the house as your income increases. So at the beginning, you own a little bit of it, then you keep buying till you buy the whole equity in the house. So, but there are a few requirements. Your gross annual household income should be £80,000 or less when buying outside London, and £90,000 or less if you're buying inside London. So that's the summary of it. Yeah, so there's also the right to buy scheme. Deposit required, not applicable per se. An ownership type is also full ownership. The benefits, it could actually work quite well for council tenants. They are offered a discount of up to £96,000 roughly. I think in London it's up to 127,940 in London to help you buy the home that you're renting. So you go from renting to ownership, but you must be a secure tenant and have been a public sector tenant for at least 3 years. So people can't just go and rent it and then try to buy it in the same year. Yeah, so these are some of the schemes. There's also the first home schemes. We usually require a deposit of 5%. Again, full ownership if you're able to buy it. The homes are discounted by at least 30% compared to the market prices, which is nice. Who wouldn't like to get like a discounted home? But there are clear criteria and requirements. It has to be a first time buyer earning less than £80,000 annually. And of course, if you live in London, it has to be £90,000. Um, there's one more, the mortgage guarantee scheme. So the deposit required for that again is 5% deposit. Ownership type again is full ownership. Of course, the benefits are clear. You can get a 95% loan to value mortgage with participating lenders, because not every lender offers this option. And they is offering a government-backed guarantee. Again, as you expect, there are clear criteria. It's not for everyone. The properties must cost £600,000 or less, and is available to first-time buyers and existing home owners looking to move. So if you live outside London and you're not in the south, most times you'll be able to find properties. I'm sure even in London and in the southwest and southeast, you can find properties that are less than 600,000, even less than that. So now let's move into the next steps. How to apply for a mortgage as a first-time buyer in the NHS. Let's get into the nitty-gritty. So if you're ready to take the plunge and you want to apply for your first mortgage, let's look at the nitty-gritty and let's walk you through the steps, step by steps. Now, basically, the first thing you want to start when you want to start applying for a mortgage, we've talked about budget. You've decided how much you want to spend, how much house you want to buy. And again, applying for a mortgage, it doesn't need to be an uphill task if you have the right guidance. The first thing I think I'll do, and that's what I'll do next time, each time I'm buying a house, and that's what I'll suggest, would be to speak to a mortgage advisor. You don't need to wait till you're ready. When you're ready planning it, you think it will be in the next 6 months, speak to a mortgage advisor, get some advice, find out what sort of mortgage you can get. They will usually offer you a face-to-face meeting or a telephone or video meeting and sort of walk through things with you, like what's the affordability, they might do eligibility checks, because most times the lenders, not most times, all lenders, they will assess your monthly income, expenses, credit score. They want to know your work status to determine if mortgage payments will be manageable for you. So it's best to work with a mortgage advisor, understand what will be needed, and get those things ready. And based on this, they may recommend some products for you to consider and make a choice. Most good mortgage advisors will recommend at least two or three or even more, especially the independent mortgage advisors that have got access to the whole market. Now, the next will be gathering the essential paperwork. So if you're going to need your utility bills, you're going to need proof of ID, you're going to need your bank statements, you're going to need your credit score, rather credit report, getting all those things in order. And if you're on a visa, if you're on a tier 2 visa, for instance, you're an expatriate or international medical graduate, making sure that your visa is also ready is all part of the documents. Now, if you've got all that in place, the mortgage advisor might help you to put through the application. The application in itself might be online. It could be a paper form. Most applications are done online these days. Or it might even be a PDF for you to fill out, depending on the lender and what they require. But it's really important to stay organized and follow the advisor's guidance step by step to ensure a smooth application. You don't want headaches. You don't want to think you've submitted a document and months later they're asking for it. Right. Now, I've mentioned mortgage advisor a few times, so let's address that. Having the right mortgage advisor who understands your unique income structure as a doctor or NHS worker, or even your visa situation as an IMG, is quite crucial. Unfortunately, this single factor, if you get it wrong, it turn your mortgage application process into a nightmare. You understand that doctors sometimes, for instance, you're a trainee, your income is going to go up, but some mortgage advisors don't understand that. And if you're an IMG, you're on a 2-year visa, if you're most likely going to get another one at the end of your training, becoming a consultant or a GP. So it's really important to work with advisors who understand NHS doctors and healthcare professionals and have had experience working with NHS doctors and healthcare professionals. And that's partly on why on Moneywise Doctor we've got advisors that we've actually vetted and screened who have worked with doctors and healthcare professionals to make sure that they have a smooth outcome. Right. Now, there's a bit more. There's other things to look at if you're going to buy your first house. Your deposit is not all the expense, and there are some little costs that people tend to not look at, and it suddenly comes out from the blues for some people. There could be broker fees, lenders fees, valuation fees, conveyancing fees, and all little expenses that you might make along the way. So make a plan for these ones as well. So don't only think about the deposit. Now, the next thing, agreement in principle. Agreement in principle. I hear a lot of people say, how can I get an agreement in principle? Or it's also called decision in principle. Well, it's not that difficult actually. If you've determined your budget and you're ready to go, you can either walk through your mortgage advisor or you can go online yourself to get an agreement in principle. Remember, even if you get it from any bank or anywhere, you don't necessarily have to use that same one. What it is, basically, an agreement in principle, it is sort of like a gentleman's agreement. The lender is saying, I'm going to lend you this money after you've answered some questions, and if the questions you've answered checks out when it comes to it, I'll lend you this money. So you can actually go online. If you want to get an agreement in principle, you can actually go online, especially if you live in the UK residential, you've got every document that is required. You can jump online and say get an agreement in principle and just mention a bank. You can go online, fill it out all out, and get one downloaded. Sometimes when you're looking at houses and when you're trying to buy a house, sellers might actually take you a bit more serious. Most times, sellers representatives like agents, they ask questions like, have you got an agreement in principle? So they know for sure that you're not just shopping around, you're actually interested and you're taking steps ready to buy. Yeah, and if you get an agreement in principle, it's not a binding document. If you're along the line, you talk to a mortgage advisor and they find you a better deal. Some of the mortgages I've used in the past, I've never heard of those banks before I use them. So the mortgage advisors, some of them could get like up to 90 lenders. So it's really quite important to understand these things But getting an agreement in principle shouldn't be an issue. It shouldn't be something that will stop you. And so there you have it. These are the steps you can actually take to get yourself ready to buy your first house. You have the blueprint now. And if you wanted to get it step by step, you wanted to get a copy that you can download, don't forget to download our free guide with the links in the description, or head over to Moneywise Doctor and download it. Now, if you've got other questions around finding your house, how to negotiate a deal, um, how much you should offer, or any other questions around mortgage or buying your first house, feel free to pop them in the comments. Now, if you found the video useful, feel free to share it to someone who may find it beneficial, maybe a colleague at work, or your friend who might be thinking of buying their first house and they're confused. And if you like the video, chances are you like the playlist in our channel on YouTube that is on mortgages for first time buyers and NHS workers. All right, till next week. All right, then. Bye bye.